Alright, hello everyone, and welcome back to the daily update of my 1000 days challenge. This is day 236. So let's get things started. Alright, so first and foremost, you'll notice the main trading accounts actually dropped a little bit more, and it was actually not the full trading size. Reason being, it was actually a link that was again liquidated. So that's something that I've put into consideration, even though it's my main trading setup. However, I feel that I've not been monitoring in terms of using isolated margin, and there wasn't sufficient margin, so it was triggered a stop loss unnecessarily. So I had to re-enter at a higher price, and it also cost me in terms of my money and stuff like that for the insurance fee and stuff like that. So that's something to always bear in mind because I've been occurring a few times of that. So I'm going to buffer bin a little bit more in terms of my isolated margin to ensure that does not happen. All right, and it has to be done on a daily basis in order to so-called minimize my risk when I'm doing isolated margin, but at the same time ensuring that I have sufficient margin in play. All right, otherwise, in terms of the setup itself, you'll notice that the market structure actually transited to a bearish market structure across the board. And you can see that for Intel, S&P 500 and NASDAQ. So however, actually, Bitcoin is actually going on the contrary, but I'll talk a little bit more about it later. Of course, you can see in terms of percentage-wise on the daily percentage change, Bitcoin is definitely going on the upside. But if you're looking in terms of the S&P 500, everything, we potentially have been some sort of like a pullback kind of structure after we have a very sharp drop and then we have a very sharp bounce, and then now we are having another kind of a potential drop again. So let's see how things goes. But overall, yeah, I would say it's rather similar. So overall, this 50 simple moving average has been rejected on the Nasdaq. However, if we do consolidate right below resistance, it will definitely be a good sign in terms of a mid to long term kind of progress. As for ASHR and KWEB, even though we are forming lower low, but you can see that the momentum is not increasing. To me, it goes to show that we could very much likely have just one small little sharp drop and potentially retest this 200 simple moving average on the ASHR and also 200 simple moving average on the KWEB itself, in which case if some very strong buying volume does come in, then potentially we could have a very strong reversal on that, and I'll be definitely interested to add in because they will very much likely form a bullish divergence both on the MACD, and also I can see a reduced volume or selling volume in terms of that if it does happen as well. So yeah, so that's very critical for me to take note in terms of ASHR and KWEB for long-term investment. And finally, for Bitcoin wise, so Bitcoin is working somewhat like a contrary, but overall you can see this, even though we are falling down, we are forming somewhat like a bull flag, I mean. So basically, even though we are forming lower low and lower high, so technically we are on a short-term bearish momentum, but you can see that volume is not increasing, which is not a very bearish sign. So for example, here we are bearish is increasing. So over here, we still remain bearish and we did form a lower low, but again, with decreased volume, it goes to show that there was a lack in terms of selling pressure in that sense. So similarly over here, I do see even though we have a very strong bearish momentum to start things off over here, it didn't sort of pick up. In fact, there was bullish momentum to support over here. And even after breaking below the 20 exponential moving average on the daily chart, we didn't manage to last below it for long. In fact, we're actually going up a bit again, and potentially we could close above that as well. So if we do form somewhat that, then there'll be a very nice bull flag, and potentially we break above this downslope trend line, then we can have a bull flag breakout pattern in that sense. All right, and on the 4-hour chart, I'm also potentially looking to enter on this trade setup. I've entered here in terms of systematic trading, but more in terms of the experimental price action. I'm waiting for this 4-hour candlestick to close. If it does close above nicely at this 50 simple moving average, I will consider entering above this with a stop loss right below here, using this as a swing low target. So this will be a very nice risk to reward around 1:1.5. And what I've drawn over here is that I'm saying that even if I were to enter right now, even though it could be at a better price, I would have to buffer in a higher kind of stop loss. And reason being is very simple, because we haven't cleared the key resistance yet. So I have to buffer that we could actually consolidate over this period in time. So if I were to enter at this lower price, that means to say that if we actually trigger my stop loss and then continue towards the upside. So I would want it to close above this 50 simple moving average to be on the conservative side in terms of price action, along with simple moving averages to take into consideration as well. So otherwise, that's more or less about it. This is the setup I'm looking to enter for, and potentially I want it to have some sort of a strong volume when it does break above. If it does show a lag in volume, then preferably I will want it to consolidate over here as well, just right below this horizontal resistance, which is at this 57.8K region. If it does consolidate nicely over there and will break out, then again I'll enter on a higher price. But again, I'll have a higher stop loss, in which case using this as a swing low. So bear in mind that it doesn't always mean that when it comes to trading, it doesn't mean that entering at a lower price means it's better. Unlike investing wise, whereby generally entering on the lower price is better because you're going on the long side and you're entering a full position size. Whereas in terms of trading, I'm always risking in terms of 1R, 2R, or whatever R you're risking, is always a percentage of your risk management in terms of your position management as well, position sizing as well. So yeah, there's something to bear in mind. Otherwise, that's more or less about it. And I'll see you guys tomorrow. Take care. Bye-bye.